And if you're looking at the markets right now, there's one thing that's impossible to ignore. Gold is absolutely exploding. We're talking over $3,200 an ounce, and silver isn't far behind, pushing past $30. This isn't just some small blip on the radar, this is a full-blown precious metals rally. Now, a lot of people will tell you to buy physical gold, maybe a few silver coins, or even invest in the big-name gold mining companies. But let me tell you, the real play, the one with the potential to absolutely transform your portfolio, is in junior miners. These are the smaller, more nimble companies that are out there exploring, developing, and yes, sometimes striking gold, literally. So in this video, we're diving deep into the world of junior gold and silver mining ETFs. First up, we're kicking things off with the big dog, the one you've probably heard of even if you're just dipping your toes into the junior mining world, the VanEck Vectors Junior Gold Miners ETF, ticker symbol GDXJ. Now this is kind of like the S&P 500 of junior gold miners. It's the biggest, most liquid ETF in the space, and it gives you broad exposure to a whole basket of small to mid-cap gold mining companies from all over the world. Now when I say small to mid-cap, I'm talking about companies that are still in the earlier stages of their mining life cycle. We're talking about companies that are out there exploring for new deposits, developing existing ones, and some that are even in the early stages of production. This is where the real excitement is, guys, because these companies have the potential to grow exponentially if they hit it big. But here's the thing about GDXJ that makes it so appealing, especially for someone who's just starting out. It's incredibly diversified. You're not putting all your eggs in one basket with a single mining company. Instead, you're spreading your risk across over 150 different holdings, all carefully selected by the folks at VanEck to represent the best of the junior gold mining world. And speaking of VanEck, they're a pretty big deal in the ETF space. They've been around for decades, they manage billions of dollars in assets, and they have a solid track record. So, you're not messing around with some fly-by-night operation here. But here's the real kicker. GDXJ has been absolutely crushing it lately. As gold prices have soared to these record highs, GDXJ has been on an absolute tear, often outperforming the broader gold mining ETFs like GDX. Alright, so we've covered GDXJ, the diversified giant of the junior gold mining ETF world. But what if you're looking for something even more targeted, something with a little more juice, a little more risk, and potentially a lot more reward? Well, buckle up, my friends, because that's where the Global X Gold Explorers ETF, ticker symbol GOX, comes into play. Now, GOX isn't for the faint of heart. This ETF takes the concept of junior to a whole new level. We're not just talking about small to mid-cap miners here, we're talking about pure play exploration companies. These are the companies that are out there in the trenches, drilling holes, taking samples, and trying to find the next big gold deposit. They're not producing any gold yet, at least not in significant quantities. Their entire business model is based on the hope and potential of future discoveries. So why on earth would you invest in something like that? Well, because when one of these companies strikes gold, and I mean really strikes it big, the stock price can absolutely explode. We're talking about 10 times, 20 times, even 50 times returns in some cases. Now, I'm not saying that every company in GOX is going to be the next Barrick Gold or Newmont Corporation. In fact, most of them probably won't be. But all it takes is one or two major discoveries to turn your investment into a life-changing sum of money. Of course, with that kind of upside potential comes a significant amount of risk. These exploration companies are inherently speculative. They're burning through cash, they're heavily reliant on raising capital through equity offerings, and there's no guarantee that they'll ever actually find anything commercially viable. So, you gotta have a strong stomach and a long-term investment horizon to play in this space. But here's the thing you need to understand about GOAX, it's volatile, like really volatile. These junior exploration companies can swing wildly in price, even on a day-to-day basis. However, if you're willing to ride out the volatility and trust in the long-term potential of gold, then GOX could be a very rewarding addition to your portfolio. Okay, so we've talked about gold, and more gold. But what about silver? After all, silver often shines even brighter when the precious metals market is on fire. And let me tell you, with silver pushing past $30 an ounce, the fire is definitely on. Now, when it comes to junior silver miners, one ETF stands out from the crowd. the ETFMG Prime Junior Silver Miners ETF, ticker symbol SILJ. This is your ticket to ride the silver wave with a portfolio of companies that are primed for explosive growth. Now, why silver, you might ask? Well, here's the thing. Silver's not just a precious metal, it's also a crucial industrial metal. It's used in everything from solar panels to electronics to medical equipment. So, as the world transitions to a more tech-driven green energy future, the demand for silver is only going to increase. And that's good news for silver miners, especially the junior ones. See, junior silver miners are often overlooked in favor of their gold-focused counterparts. But that's a mistake, my friends, because when silver starts to run, it can really run. And these junior miners, with their smaller market caps and higher leverage to the price of silver, have the potential to deliver some truly spectacular returns. Now let's talk about SILJ specifically. This ETF invests in a basket of micro to small cap silver exploration and production companies. And when I say micro cap, I'm talking about companies that are tiny, even by junior mining standards. We're talking about companies with market caps of less than $500 million, sometimes even less than $100 million. Now I know what you're thinking, Drew, that sounds risky. And you're not wrong. Investing in micro-cap companies, especially in the volatile world of mining, is inherently risky. But here's the thing, with high risk comes the potential for high reward. These tiny companies have the potential to double, triple, even quadruple in value if they make a significant discovery or if the price of silver continues to climb. And that's why SILJ is so intriguing. Alright, so we've covered the heavy hitters in the junior precious metals ETF space. GDXJ for broad exposure to junior gold miners, JOEX for those seeking the high-risk, high-reward potential of gold explorers, and CLJ for a targeted bet on junior silver miners. But the world of ETFs is vast, my friends, and there are a few other options out there that might be worth considering, especially if you're looking for something a little more niche or want to further diversify your precious metals holdings. Now, I'm not going to sugarcoat it. The liquidity and asset under management, AUM, of some of these smaller, more specialized ETFs can be a bit of a concern. When you're talking about ETFs that track a relatively illiquid asset class like junior miners, it's important to make sure there's enough trading volume and a tight enough bid-ask spread to ensure you can buy and sell shares without getting killed on transaction costs. So before you jump headfirst into any of these lesser-known ETFs, do your due diligence. Check the average daily trading volume, look at the bid-ask spreads at different times of day, and make sure you're comfortable with the level of liquidity. That being said, there are a few intriguing options out there that might be worth a closer look. One such ETF is the Global X Silver Miners ETF, ticker symbol SIL. Now, SIL isn't strictly a junior silver miners ETF. It tracks a broader index of silver mining companies, including some larger, more established players. However, it does have a significant allocation to junior miners, and it offers a more diversified way to play the silver market than SILJ. Another ETF that's worth considering is the iShares MSCI Global Gold Miners ETF, ticker symbol RING. Again, this isn't strictly a junior miners ETF, it tracks a global index of gold mining companies of all sizes. However, it does have a decent allocation to mid-cap and small-cap miners, which gives it some exposure to the growth potential of the junior mining space. So, there you have it, guys. We've explored the exciting world of junior gold and silver mining ETFs, from the diversified giant that is GDXJ to the high-risk, high-reward potential of JOEX and the silver-focused SILJ. Remember, these ETFs offer a unique way to capitalize on the explosive growth potential of smaller mining companies during a precious metals bull market. If you found this video helpful, do me a favor and hit that like button, share it with your friends who are interested in the markets, and subscribe to the channel for more insights on how to build wealth and achieve financial freedom. Thanks for watching, and here's to navigating the exciting world of precious metals investing together.